welcome to the brand new One Bite at a Time show. Why are we doing this show? Well, I have found that agents require a lot of information in order to be experts in their field. And that's what I've been doing over 20 years is doing long seminars and workshops all over California. I've got a lot of experience there, but I also know that there's an awful lot of great information that can be given to agents in small little bites. I mean, how do you eat an elephant? One bite at a time. Hence the name, the One Bite at a Time show. So we're going to be your hosts. My name is Steve Gronlund.
And I'm Roxanne Hayes, and we're both with Vintage Mortgage Firm.
And Roxanne, tell us what you think about the show and what you think we can accomplish.
I think this is a wonderful opportunity for our agents. We're going to give them lots of great information, and it's going to be in video. So you're going to always be able to go to the library, look at the videos, push play, pause, rewind as many times as you'd like. So here's your one bite for today.
So reverse mortgages to purchase a home. It's really important you understand this. Not all agents do understand this the way they need to understand it. So let's just say you have a prospective seller that would love to sell their home and buy a home closer to the beach and nearer their children and maybe for their golden years. Let's say your prospective seller has become discouraged because their current home, which is valued at $500,000 now, although currently free and clear, won't net them enough money necessary to buy the home they want in the area they would like to buy or retire in, where the average home is $700,000 to $800,000. They don't want a payment. They were hoping to pay cash, and they simply can't qualify for a normal mortgage. There are a lot of sellers in this situation right now. Their home is worth more than ever before, but where they like to buy is also worth more than ever before. Most of them are deciding not to sell and stay put. It's an easy solution, however. Your seller simply sells their home, netting about $460,000 after commissions. Then the seller becomes a buyer and they buy a home in the area they want to buy, but now they're going to be buying at $850,000. They put $425,000 down and use a reverse mortgage for the rest. No payments, problem solved. As long as they can afford their taxes and your insurance and their basic cost of living, sustenance, this would be a great solution for them. Let's say we have a different solution. Let's say that you have a prospective buyer who doesn't qualify for a forward mortgage for whatever reason. They have been turned down several times and they too have become discouraged. They have some IRA money of about $250,000 and they have a pension coming in, and both of them have Social Security. They have called you to see if you can help find them a solution. See, they have to move because their landlord, after 10 years of renting, have decided to sell their home. Of course, they would rather not use all their savings. If they started drawing from their IRA, they could expect about $1,000 per month if they didn't want to draw from principal. You call your lender partner or lending partner to see what might be done. I might suggest a reverse mortgage purchase here. The borrower will simply put $200,000 down, leaving the rest to pay taxes and have some savings. They then buy a home for $400,000 that is just right for them and close to their children. A normal $400,000 mortgage might be $2,340 a month, principal and interest. That means that they will save $2,340 a month, which is a lot more than the income that they would get if they invested their $250,000 into an annuity or just started drawing cash from it. Kids can often help. I've seen several solutions or situations where children will provide the funds necessary to buy a home. It could be less expensive to them, especially if there's several children and they're going to end up augmenting the parents' income or see them in a bad situation. They all inherit the equity and very likely would be paid back their investment money plus some nice profit. It becomes an investment for the children and even comes with some tax deductions. We have facilitated this kind of solution in the past. Many times a reverse mortgage requires a little more love on the part of the loan officer. Sometimes there's several meetings with members of the family so that they can all fully understand the solution and how they're going to become part of it. Patience and empathy go a long way here. You'll want a good loan officer to pre-qual your buyer and be willing to spend the time necessary with your buyer and possibly their children. The loan officer needs to be able to move the file along to a point where all parties are ready. The counseling has been done and the buyers are ready to start looking for a home. Then and only then, when all parties are on board, your client comes back to you with a nice pre-approval, ready to go, and you do your magic. Problem solved. Eligible property types, all of them. Single families, 2 to 4 units. Of course, 1 unit has to be owner occupied. Manufactured homes, condominiums, townhomes. Of course, all borrowers have to be over 62, but I want you to know there are new reverse mortgage programs coming out for those 55 and over. In fact, they're already out. Before applying, they must receive mortgage counseling. I always recommend this before they start looking. There are also some financial requirements. You know, we want to make sure that this is right for them and they're going to be able to afford taxes, insurance, housing upkeep, and also food and, you know, the regular cost of living. So there's 2 examples of how you can use a reverse mortgage to help a client buy or sell real estate.
Hey guys, here's your market update. Before we get started, just wanted to let you know that all the rates quoted here are with no lender fees and no points. So please make sure you're comparing apples to apples. All right, so for today on a conventional, we are at 5.375% with an APR of 5.427%. For FHA, we're at 4.625% with an APR of 4.832%. And for VA, we're at 5% with an APR of 5.033%. And for jumbo, with 10.01% down, we are at 5.75% with an APR of 5.938%. Okay, so for today's real estate market update here for Riverside County, we have the median list price at $664,900. We have the median days on market at 14, and our inventory for Riverside County is 3,335 homes. And for the city of San Diego, we have a median list price of $1,250,000. We have the median days on the market is 7 days, and the inventory is at 485 single-family residents. So that's our show for today. We really hope you enjoyed your One Bite of the Day show. Please like us and follow us on all social media platforms. We are on Instagram, Facebook, YouTube. The links will be in the email. Please like, comment, subscribe. We really appreciate you watching us. And of course, please don't keep us a secret. Make sure you share this video with another realtor that you feel will love this information. Thanks so much, and thanks for watching.
So there you have it, agents. That's the kind of information you're going to get. The One Bite at a Time show, the brand new One Bite at a Time show. I hope you
Hey, Steve, I hate to interrupt you, but that is a great costume change you got going there.
Yeah, I like those backgrounds. You know, they can all do all kinds of things. Did you see the new beta stuff that they got going on? I mean, the beta stuff is really kind of cool. It's, hello, agents. It even makes your mouth talk like you're really actually talking, and it blinks when your eyes blink. Woo!